Central banks around the world are engaging in a QE policy in order to make sure that deflation does not occur. Today we will discuss how China is now buying shares of the stock market to prevent a collapse. You came here for the truth, so let me unveil that for you. Let's get into this today, China just being one very huge example of this, but it's going on all around the world. At first glance, Beijing appears to have enjoyed a spectacular success since staving off a potentially disastrous collapse in its share market. This was from a few days ago, so just hang in there. Despite a slight wobble last Friday, China's share markets gained ground for a third consecutive week. The main Shanghai Composite Index is 20% higher than its recent low on July 9th, but it's still 20% below the 7-year high it reached over 6 weeks ago. What they're trying to tell you here is that they're gaining ground. Don't worry about it. Everything is okay. Look at this, though. Out of Reuters, brand new information as of this recording. Chinese shares tumble 8.5% in the biggest one-day drop since 2007. What we are doing, once again, is heading back to that pre-crisis moment, the Lehman Brothers era right here. And we know that this is a very, very bad situation. Everything is leading back to that moment right now. And of course, cycles do repeat. So they tumbled 8.5%. That is a very, very significant drop, especially because the Chinese stock market is quite large. It's not really an amateur stock market to look at. So what happens when you have a tumbling stock market, a hurt economy? That's right. You tighten the noose around their necks. China imposes harsher restrictions on defaulters. People who fail to fulfill court orders will face travel, financial, and employment restrictions, said the Supreme People's Court. Now, I'm not even necessarily denying that this should be happening, but what about when they loosen their lending practices and basically give out money to people who they know are not going to be paying back? That's what this is all about. Besides restrictions on travel and employment, the defaulters will face constraints when applying for a loan or opening a credit card. I believe that there should be constraints on certain individuals, but they've been really faltering where they should have been really tightening up in the first place before. So let's look at this out of China Daily. Recent overweighting to stem A-share plunge has made China Securities Finance Corp., that's a central bank-backed refinancing institution, among the top 10 shareholders of many listed firms. So right here, you have the Central Bank of China being funding this corporation here, the China Securities Finance Corp. And they are going out and buying a few of the stocks to boost up the stock market. They're being left holding on to all of these shares, and it is being funded simply out of thin air. This is not a good idea, and you know eventually this is going to become something that collapses. Let's move on to a diagram from my book. You may recognize this, but I wanted to note this because it is very relevant. So this happens to be the Fed, and it happens to be about the US, but just take it for what it is. The U.S. sells its debt to the Fed. So basically the Fed prints up money out of thin air and hands it over to the U.S. and then they give it this bond, which is nothing more than an IOU. So what happens? Well, the Fed is left with a pile of IOUs. There's no difference between that and what is occurring right now in China by buying up the shares of the stock market by this central bank. That's what's occurring right here. And we know what happens when you get left with a pile of IOUs. You get stuck with that bill. This is out of Bloomberg in a connected article. China's securities regulator banned major shareholders, corporate executives, and directors from selling stakes in listed companies for 6 months. It's in an effort to stop the nation's $3.5 trillion stock market rout. So you're having a large percentage of the people here, or I should say a large percentage of the money, being basically held in captivity because they do not want them to sell off, because if they sell off, that's going to cause an even bigger disaster. So what's happening here in China is that they are imposing capital controls. You don't call it capital controls because that's bad. It will scare people. Investors with stakes exceeding 5% must maintain their position. The China Securities Regulatory Commission said in a statement, the rule is intended to guard capital market stability amid an unreasonable plunge in share prices. Meaning, if it goes lower than we want it to, you're not going to be able to get out your money. This is why paper investments are very, very risky. You don't understand the fact that you can have paper assets. You can have lots of paper assets, but you need to hold on to every type of asset, not things that are in paper, because of the dangers of capital controls being a primary reason. Right here, growing concerns about the health of the Chinese economy helped wipe $40 billion off the value of Apple on Wednesday, despite the company reporting a sharp increase in global sales and profits. What I wanted to note by this is that if you believe that a stock is particularly great, whether it's Apple or Microsoft or Facebook or what have you, you might think this company is going to do well over the next 2 years, 5 years, 10 years, 100 years. But what happens in a situation like this with China? Well, the stock plunges. So even when everything is pointing towards lifting that stock market up, it may go down. The 5% fall in share price, the world's biggest company, was mirrored by a slide in shares in mining and commodity firms to the lowest level since the stock market crash of 2008. Investors regard the mining and commodities industries as vulnerable to a slowdown in the world's second biggest economy. And this is true because if they're not buying copper, if they're not buying other commodities, they're simply not going to have that economy running here. So that's what's happening in China and how it affects even the US companies as well. Now, this is a little connected article. I just want to mention it very quickly. Publishing group Pearson has announced it is to sell the Financial Times to a group of Japanese media firm Nikkei for $844 million in cash. So we have really, if you look at it in Greece, what's happening, you have the assets being sold off, and basically a lot of companies and assets are being traded hands right now. They're being sold off in many cases for pennies on a dollar. This is very serious when you think about it, but this is just one more instance of either mergers and acquisitions or assets and investments being sold off. Out of The Guardian, not related to the video today. I needed to mention it because I don't know when I could do a video about it, but it is very, very, very serious. Some members of the Greece leftist-led government wanted to raid central bank reserves and hack taxpayer accounts to prepare a return to the drachma. And that is according to reports that highlighted the chaos in the ruling Syriza party. I cannot confirm this at all. It is out of The Guardian. All I can say is that this is going basically with what we had heard before. I told you about the bail-ins and how they could occur. This is just one more piece of information relating to that. It could still occur. This is not over yet, so we need to pay particular attention to what is occurring in Greece right now, that they are willing to go into people's bank accounts and steal the money. This could very well happen. Keep your eyes peeled. Just wanted to mention that. If you found today's video informative, please give me a thumbs up. I also wanted to note that because of the overwhelming response for yesterday's video, the satirical piece that I did, surely there will be more in the future. I don't want to make a joke out of the channel necessarily, but once in a while, it is fun to do something like that. So stay tuned for more of those. Last but not least, if you found this video informative, I know you'll find my book even more informative. You can actually look through the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the book and see if you like it for yourself. Take care.